Dear students, I think you are eagerly waiting for the video on chapter 2, that is accounting for partnership basic concepts, part 1. You know, partnership is a business where two or more persons jointly carry on the business. The theoretical aspects of partnership you have studied in the business studies last year. This year we are more concerned with accounting aspects of partnership. But before going to see the accounting aspects, it is apt on my part to look at the theoretical background in brief. The limitations of sole proprietorship organization has paved the way for development of partnership business. It may be the limited capital, then limited managerial ability that forced the businessman to go for partnership form of business. And in English there is one proverb: two heads are better than one while taking decisions on business matter, because when two people cooperate with each other, they are more likely to solve a problem than one person doing it alone. So, partnership business helps to get more managerial ability because two or more person join together here and carry on the business. Now, let us move on to see the definition of partnership. Section 4 of the Indian Partnership Act 1932 defines the term partnership as the relation between the persons who have agreed to share the profits of a business carried on by all or any of them acting for all. What it says? Partnership is the relation between persons who have agreed to share the profits of a business carried on by all or any of them acting for all. Persons who have entered into partnership with one another are individually called partners. They are individually called partners and collectively called firm. And the name under which the business is carried is called firm name. I hope you got the point. It is a relation between persons who have agreed to share the profits of a business carried on by all or any of them acting for all. ಎಲ್ಲರೂ ಸೇರಿ ಅಥವಾ ಎಲ್ಲರ ಪರವಾಗಿ ಕೆಲವರು ನಡೆಸುವ ವ್ಯವಹಾರದಿಂದ ಬಂದ ಲಾಭವನ್ನು ಹಂಚಿಕೊಳ್ಳಲು ಒಪ್ಪಿಕೊಂಡಂತಹ ವ್ಯಕ್ತಿಗಳ ನಡುವಿನ ಸಂಬಂಧಕ್ಕೆ ನಾವೇನು ಹೇಳ್ತೇವೆ? ಪಾರ್ಟ್ನರ್ಶಿಪ್, ಪಾಲುದಾರಿಕೆ ಅಂತ ಕರಿತೇವೆ. The persons who have entered into partnership with one another are individually called partners and collectively they are called partnership firm, and the name under which they carry on business is called the firm name. That's about the meaning and definition of partnership. Now let us move on to see the features of partnership. First one, two or more persons. In order to constitute a partnership, there must be at least two persons, because the minimum number of partners in a partnership firm is 2. If one person is there, it becomes sole proprietorship organization. So the minimum number of members required to form a partnership is 2, and the maximum is, as mentioned in the book, is 10 in case of banking business and 20 in case of other business. But after the passing on of Companies Act 2013, the maximum number of partners in a partnership firm is limited to 50. So today minimum is 2 and maximum is 50. You may even just see it. Section 464 of the Companies Act 2013 empowers the central government to prescribe maximum number of partners in a firm, but the number of partners so prescribed cannot be more than 100. And the central government in the year 2014 has fixed the maximum number of members to 50. Okay, this is for knowledge sake. You should know minimum is 2, maximum is 50. Okay. Second one is agreement. Partnership comes into existence by an agreement among the partners. So it is essentially a baby of an agreement. Partnership is the result of an agreement between 2 or more persons to do business and share its profits and losses. And this agreement may be oral or written. It may be oral or written. There is no condition that a partnership agreement should be in writing, but it is advisable to have it in writing. It is advisable to have it in writing. Okay. Next, business. Partnership should carry out a business, and that business should be a lawful business. ಅದು ಒಂದು ವ್ಯವಹಾರವನ್ನು ನಡೆಸಬೇಕು ಮತ್ತು ಆ ವ್ಯವಹಾರ ಏನಾಗಿರಬೇಕು, ಕಾನೂನುಬದ್ಧ ವ್ಯವಹಾರ ಆಗಿರಬೇಕು. ಸುಮ್ಮನೆ ಒಂದು ಚಟುವಟಿಕೆಯನ್ನು ಇಬ್ಬರು ಸೇರಿ ಮಾಡಿದರು ಅನ್ನುವ ಕಾರಣಕ್ಕಾಗಿ ಮಾತ್ರ ಅದು ಪಾಲುದಾರಿಕೆ ಆಗೋದಿಲ್ಲ. ಉದಾಹರಣೆಗೆ ಎ ಮತ್ತು ಬಿ ಸೇರಿಕೊಂಡು ಜಾಯಿಂಟ್ ಆಗಿ ಒಂದು ಲ್ಯಾಂಡನ್ನು ಪರ್ಚೇಸ್ ಮಾಡ್ತಾರೆ. ಎ ಆ್ಯಂಡ್ ಬಿ ಜಾಯಿಂಟ್ಲಿ ಪರ್ಚೇಸ್ ಎ ಲ್ಯಾಂಡ್ ಫಾರ್ ದರ್ ಓನ್ ಪರ್ಪಸ್. It cannot be called as partnership business because they have purchased the land for their own use. Then they are the joint owners of that land and they are not the partners in that particular case. Next, mutual agency, that is principal and agent relation. Say in partnership, all the partners have the agency relation. Each partner is the agent of other partner for the acts he has done for the firm. Okay. Next, sharing of profit. Profit or loss will be shared among the partners. Next feature, liability of partners is unlimited. Liability of the partners is unlimited, joint and several. ಅದು ಏನಾಗಿದೆ, ಅನ್ಲಿಮಿಟೆಡ್ ಆಗಿದೆ. ನಿಮಗೆ ಗೊತ್ತಿದೆ ಅನ್ಲಿಮಿಟೆಡ್ ಲಯಬಿಲಿಟಿ ಅಂತಂದರೆ ಇವನ್ ದ ಪರ್ಸನಲ್ ಪ್ರಾಪರ್ಟಿ ಈಸ್ ಆಲ್ಸೋ ಹೆಲ್ಡ್ ಲಯಬಲ್ ಫಾರ್ ದ ಡೆಟ್ಸ್ ಆಫ್ ದ ಫರ್ಮ್ ಆ್ಯಂಡ್ ಇಟ್ ಈಸ್ ಜಾಯಿಂಟ್. ಆಲ್ ದ ಪಾರ್ಟ್ನರ್ಸ್ ಆರ್ ಜಾಯಿಂಟ್ಲಿ ಲಯಬಲ್ ಟು ಪೇ ದ ಡೆಟ್ಸ್ ಆಫ್ ದ ಫರ್ಮ್ ಆ್ಯಂಡ್ ಇಟ್ ಈಸ್ ಸೆವರಲ್. Sometimes if any one of the partner is not in a position to pay or is not at all available, then other partners should pay the entire debts of the firm, including that third partner. Or if one partner has become insolvent, his share of liability should also be borne by the remaining partners. Okay, these are some of the features of partnership. A question may come for 2 marks. Name any 2 features of partnership business or partnership firm. Okay. Next, let's move on to see the other aspect, that is here partnership deed. I told earlier, partnership is essentially a baby of an agreement, or no partnership will come into existence without agreement, and that agreement may be oral or written. But when the partnership agreement is written and signed by all the partners and is duly stamped according to the Stamp Act, it is called partnership deed. When partnership agreement is written and signed by all the partners and is duly stamped according to the Stamp Act, it is called partnership deed. See what it contains then. Contents of partnership deed. The contents of partnership deed differs from business to business, and the understanding among the partners will decide the contents of partnership. But generally, a partnership deed contains the following items. First one is the name and address of the firm and its main business. The partnership deed clearly contains the name and address of the firm and its main business. And secondly, names and addresses of all the partners. And next, amount of capital to be contributed by each partner. All these points are self-explanatory. Amount of capital to be contributed by each partner. Then it includes the date of commencement of partnership. Next, profit and loss sharing ratio. How the partners are supposed to share the profit, whether it is equal or whether it is 2:3:1 or 3:2:1, like that. They will be, they mention it in the partnership deed. Next, rate of interest on capital, loan, drawings, etc. Rate of interest on capital, loan and drawings. Next, these are the main contents of partnership deed. It also includes the methods of maintaining the books of account, then the salary or commission payable to the partners if any, and so many other items as decided by the partners. Okay, now let's move on to see the next aspect, that is rules to be followed in the absence of partnership deed. In some cases, partners may not maintain a partnership deed. When partnership deed is not there, the partners are supposed to follow the provisions of the Partnership Act 1932. See, in 5 important circumstances, what provision need to be followed, that we are supposed to discuss here, from knowledge point of view also, and even from the examination point of view also, because you may get a practical oriented question on this. Okay, so first, profit sharing ratio. In the absence of partnership deed, the profit or loss should be shared equally among the partners. In the absence of partnership deed, the profit or loss should be shared equally among the partners. If they have partnership deed, they may mention the ratio in which they are supposed to share the profit or loss. But when there is no partnership deed, the Partnership Act says the profit or loss should be shared equally. You have to remember, alva, partnership deed illದೆ ಇರುವಾಗ ಪ್ರಾಫಿಟ್ ಅಥವಾ ಲಾಸ್ ಅನ್ನು ಹೇಗೆ ಹಂಚಿಕೊಳ್ತಾರೆ, it should be shared among the partners equally. Second one, interest on capital. Interest on capital may be paid at the rate mentioned in the partnership deed. If partnership deed is silent about the interest on capital, no partner is entitled to any interest on his capital. If partnership deed is silent, as per the Partnership Act 1932, no partner is entitled to any interest on his capital. Next, interest on drawings. Again same, if partnership deed allows interest on drawings is to be charged at the rate mentioned in the partnership deed. If partnership deed is silent, no interest is to be charged on the drawings made by the partners. Here, remember, when partnership deed is silent, no interest is to be charged on the drawings made by partners. Next, interest on loan and advances. Interest on loans and advances. When partnership deed is silent, partners are entitled to receive interest at the rate of 6%. Remember, if the partnership deed is silent, partners are entitled to receive interest at 6% per annum on the loan advanced by them to the firm. Next, salary or remuneration for firm's work. If partnership deed is silent, no partner is entitled to receive any salary or remuneration for taking part in the conduct of the business. When partnership deed is silent, no partner is entitled to get salary or remuneration for taking part in the conduct of the business. Next, maintenance of capital accounts of partners. There are two methods. One is the fixed capital method and the other one is fluctuating capital method. Let's see now first fixed capital method. Fixed capital method is a method of maintaining the partner's capital account where the capital account balance remains fixed. It's a method where the partner's capital account balance remains fixed. Under this method, the capitals of the partners remains fixed unless additional capital is introduced or part of the capital is withdrawn as per the agreement among the partners. ಈ ಫಿಕ್ಸ್ಡ್ ಕ್ಯಾಪಿಟಲ್ ಸಿಸ್ಟಮಲ್ಲಿ ಅಥವಾ ಮೆಥಡಲ್ಲಿ ಹೆಸರೇ ಹೇಳುತ್ತೆ ಏನು, ಇಟ್ ಈಸ್ ಫಿಕ್ಸ್ಡ್. ವಾಟ್ ಈಸ್ ಫಿಕ್ಸ್ಡ್ ಇಯರ್? ಕ್ಯಾಪಿಟಲ್ ಅಕೌಂಟ್ ಬ್ಯಾಲೆನ್ಸ್ ಈಸ್ ಫಿಕ್ಸ್ಡ್. ಕ್ಯಾಪಿಟಲ್ ಅಕೌಂಟ್ ಬ್ಯಾಲೆನ್ಸ್ ಈಸ್ ಫಿಕ್ಸ್ಡ್. ಪ್ರತಿ ವರ್ಷ ಚೇಂಜ್ ಆಗ್ತಾ ಹೋಗೋದಿಲ್ಲ. ಒಂದು ಅಮೌಂಟನ್ನು ಕ್ಯಾಪಿಟಲ್ ಅಂತ ತಂದಿದ್ರೆ ಅದು ಅಷ್ಟೇ ಇರುತ್ತೆ. ಉದಾಹರಣೆಗೆ ಎ ಅನ್ನುವನು 50,000 ಕ್ಯಾಪಿಟಲನ್ನು ತರ್ತಾನೆ, ಅವನ ಕ್ಯಾಪಿಟಲ್ ಅಕೌಂಟ್ ಬ್ಯಾಲೆನ್ಸ್ ಎಷ್ಟು ತೋರಿಸುತ್ತೆ? 50,000 ತೋರಿಸುತ್ತೆ. Unless he withdraws some portion of the capital or unless he brings in additional capital. ಅವನು ಮತ್ತೆ ಹೆಚ್ಚಿನ ಬಂಡವಾಳವನ್ನು ತರದೇ ಇದ್ದರೆ ಅಥವಾ ಇದ್ದ ಬಂಡವಾಳವನ್ನು ವಿತ್ಡ್ರಾ ಮಾಡದೇ ಇದ್ದರೆ ಅವನ ಕ್ಯಾಪಿಟಲ್ ಎಷ್ಟಿರುತ್ತೆ? 50,000 ಇರುತ್ತೆ. That type of maintaining the capital account is called fixed capital method. Then how it remains fixed? A question arises. How partners' capital remains fixed even after carrying on operations. Capital balance remains fixed because all adjustments in respect of interest on capital, interest on drawings, salary and share of net profit or net loss are recorded in a separate account called partners' current account. Under this method, two accounts are maintained. One is partner's capital account and the other one is partner's current account. Capital account balance ಇಲ್ಲಿ ಯಾಕೆ ಫಿಕ್ಸ್ ಆಗಿರುತ್ತೆ ಅಂತಂದರೆ, ಸಂಬಂಧಪಟ್ಟಂತಹ ಎಲ್ಲ ಅಡ್ಜಸ್ಟ್ಮೆಂಟ್ಗಳನ್ನು, ಉದಾಹರಣೆಗೆ ಇಂಟ್ರೆಸ್ಟ್ ಆನ್ ಕ್ಯಾಪಿಟಲ್, ಇಂಟ್ರೆಸ್ಟ್ ಆನ್ ಡ್ರಾಯಿಂಗ್ಸ್, ಸ್ಯಾಲರಿ ಮತ್ತು ಪ್ರಾಫಿಟ್ ಅಥವಾ ಲಾಸ್ ಶೇರನ್ನು ಸೆಪರೇಟ್ ಅಕೌಂಟಲ್ಲಿ ಬರೀತಾರೆ. ದಟ್ ಈಸ್ ಪಾರ್ಟ್ನರ್ಸ್ ಕರೆಂಟ್ ಅಕೌಂಟ್. ಹಾಗಾಗಿ ಕ್ಯಾಪಿಟಲ್ ಅಕೌಂಟಲ್ಲಿ ಯಾವ ಅಡ್ಜಸ್ಟ್ಮೆಂಟನ್ನು ಮಾಡದೇ ಇರೋದ್ರಿಂದಾಗಿ ಕ್ಯಾಪಿಟಲ್ ಅಕೌಂಟ್ ಬ್ಯಾಲೆನ್ಸ್ ರಿಮೇನ್ಸ್ ಫಿಕ್ಸ್ಡ್ ಆ್ಯಂಡ್ ಆಲ್ ಅಡ್ಜಸ್ಟ್ಮೆಂಟ್ ವಿಲ್ ಬಿ ಮೇಡ್ ಇನ್ ಕರೆಂಟ್ ಅಕೌಂಟ್. ಓಕೆ, ನೆನ್ಪಿಟ್ಕೊಳ್ತೀರಲ್ವಾ? ಸೊ ಫಿಕ್ಸ್ಡ್ ಕ್ಯಾಪಿಟಲ್ ಮೆಥಡ್ ಈಸ್ ಎ ಮೆಥಡ್ ವೇರ್ ದ ಪಾರ್ಟ್ನರ್ಸ್ ಕ್ಯಾಪಿಟಲ್ ಅಕೌಂಟ್ ಬ್ಯಾಲೆನ್ಸ್ ರಿಮೇನ್ಸ್ ಫಿಕ್ಸ್ಡ್. Here capital account balance remains fixed because all adjustment relating to interest on capital, interest on drawings, salary and share of net profit or net loss are recorded in partner's current account. So capital account balance remains fixed. Okay. Next, let's move on to see the other method, that is fluctuating capital method. What it says, fluctuating capital method. The very name says here the capital account balance fluctuates or changes year after year. Why it changes year after year? It changes year after year because all adjustments are made in capital account itself. So, fluctuating capital method is a method of maintaining the partner's capital account where the capital account balance fluctuates or changes from year after year. Capital account balance fluctuates or changes from year after year. Why it changes? It changes because under this method all the adjustments such as share of profit and loss, interest on capital, drawings, interest on drawings, salary, commission, etc. are recorded directly in the capital accounts of the partners. So it fluctuates. Okay. Next, the difference between fixed capital method and fluctuating capital method. A question may be asked for 2 marks here. First point of difference is number of accounts. In case of fixed capital method, 2 separate accounts are maintained, namely capital account and current account. And second one is fluctuating capital method. Here only one account is maintained for each partner, that is capital account. Here 2 accounts, capital account and current account. Here capital account. Second point of difference is adjustments. All adjustments are made in partner's current account. In case of fixed capital method, all adjustments are made in partner's current account. In case of fluctuating capital method, all adjustments are made in capital account. All adjustments are made in capital account. So capital account balance fluctuates. That we have seen, Next, fixed balance. Here the capital account balance remains fixed unless there is an addition to or withdrawal of capital. Here the capital account balance fluctuates from year to year. And next, nature of balance. Capital account always shows credit balance. In case of fixed capital method, capital account always shows credit balance, whereas in case of fluctuating capital method, capital account may show credit balance or debit balance. These are the differences between fixed capital method and fluctuating capital method. Okay. Now let's move on to see the next aspect here, that is profit and loss appropriation account. Profit and loss appropriation account. What it is? Profit and loss appropriation account is an extension of profit and loss account of the firm. It is an extension of profit and loss account of the firm. It shows how the profits are appropriated or distributed among the partners. It shows how the profits are appropriated or distributed among the partners. All adjustments in respect of partner's salary, partner's commission, interest on capital, interest on drawings, etc. are made through this account. All adjustments in respect of partner's salary, partner's commission, interest on capital, interest on drawings, etc. are made through this account. That's about the meaning of profit and loss appropriation account. Now let's move on to see the format of profit and loss appropriation account. Take the heading profit and loss appropriation account. Debit, credit, 4 columns, particulars, amount rupees, particulars, amount rupees. Generally we start with the credit side where we are supposed to write by profit and loss account, net profit brought down. By profit and loss account, net profit brought down. If there is net loss, the same will come on the debit side, but the situation is very rare. That too for your level it may not come. In almost all the problems we are supposed to take here net profit only. Okay, by profit and loss account, net profit brought down. You may write that also. Next, on the debit side, we write all appropriations out of profit. And generally, the appropriations include interest on capital, salary or commission payable to the partner, then interest on loan payable to the partner. Okay, these are the items to be appropriated. And if the firm charges interest on drawings, it will be income to the firm, so again it will be credited here. Okay, now let me start. On the debit side, to interest on capital, you have to write on all the partners, you have to calculate the interest, and the net amount may be written in the outer column. Next, salary to partner. If any partner is entitled to receive salary, the same should be recorded here. Next, commission to partner, the same should be recorded here. Next, to interest on partner's loan. If partner has advanced some loan to the firm, the same should be recorded on the debit side of profit and loss appropriation account. Next, if there is interest on drawings, it should be credited to the profit and loss appropriation account. Okay, these are the usual items that appear in profit and loss appropriation account. Correct agi nodಕೊಳ್ಳಿ. ಹೇಗೆ ಮಾಡಬೇಕು profit and loss appropriation account ಮಾಡುವಾಗ? ಫಸ್ಟ್ ಫಾರ್ಮೇಟ್ ಅನ್ನು ಡ್ರಾ ಮಾಡಿ ಆದ ನಂತರ ಅಲ್ಲಿ ಕೊಟ್ಟಿರ್ತಾರೆ ಪ್ರಾಬ್ಲಮ್ ಅಲ್ಲಿ ಸಾಮಾನ್ಯವಾಗಿ ಆ ಕೊಟ್ಟಿರುವಂತ ನೆಟ್ ಪ್ರಾಫಿಟ್ ಅನ್ನು ಪ್ರಾಫಿಟ್ ಅಂಡ್ ಲಾಸ್ ಅಪ್ರೋಪ್ರಿಯೇಷನ್ ಅಕೌಂಟ್ ನ ಕ್ರೆಡಿಟ್ ಸೈಡ್ ಗೆ ತಂದು ಬರಿಬೇಕು ಬೈ ಪ್ರಾಫಿಟ್ ಅಂಡ್ ಲಾಸ್ ಅಕೌಂಟ್. ಆಮೇಲೆ ಇಂಟ್ರೆಸ್ಟ್ ಆನ್ ಕ್ಯಾಪಿಟಲ್ ಅನ್ನು ಡೆಬಿಟ್ ಸೈಡ್ ಗೆ ಬರಿಬೇಕು. ಸ್ಯಾಲರಿ ಅಥವಾ ಕಮಿಷನ್ ಇರುತ್ತೆ ಅದನ್ನು ಕೂಡ ಇಲ್ಲಿ ಡೆಬಿಟ್ ಸೈಡ್ ಗೆ ಬರಿಬೇಕು. ಇಂಟ್ರೆಸ್ಟ್ ಆನ್ ಡ್ರಾಯಿಂಗ್ಸ್ ಇದ್ರೆ ಕ್ರೆಡಿಟ್ ಸೈಡ್ ಗೆ ಬರಿಬೇಕು. ಓಕೆ, ನೌ ಫೈಂಡ್ ದ ಟೋಟಲ್. ನಾನು ಇಲ್ಲಿ ಕ್ರೆಡಿಟ್ ಸೈಡ್ ಎಷ್ಟು ಟೋಟಲ್ ಇದೆ ಅಂತ ತಗೊಂಡಿದ್ದೇನೆ. Write the same total on the other side. Now find the difference. The difference should be transferred to partner's capital account. Net profit transferred to partner's capital account. You have to write the amount here. It should be distributed in the given ratio. If ratio is not given, the same should be distributed among the partners in equal proportion or in equal ratio. Okay, this is how profit and loss appropriation account is to be prepared. In the next class, I will take up problem on preparation of profit and loss appropriation account. Okay, thank you.